Hey there, this is Robert C. Baker with Zach Taylor, Chattanooga, and Move to Chattanooga, your local real estate expert here in the greater Chattanooga, Tennessee area. Whether you're thinking about buying, selling, or investing, this video is going to give you a deep dive into what's been happening in our local real estate market, and more importantly, what that can mean for you as you move forward. Let's jump into it. First off, let's talk about the number of single-family homes actually being sold. As a friendly reminder, Chattanooga MSA Plus includes 3 counties in southeastern Tennessee, 3 in northwest Georgia, the Chattanooga Metropolitan Statistical Area, plus Bradley County in Tennessee. Here's our first chart. From January through June of 2025, we saw 3,809 closed single-family sales in the Chattanooga MSA Plus. And if that sounds like a low number, you're absolutely right. That's the slowest pace we've seen since 2015. For perspective, back in 2021, we hit nearly 4,900 closed sales during that same time period. So what's changed? A few big things. Higher mortgage rates. With interest rates in 2025 hovering between 6.6 and 7.25, a lot of buyers are either priced out or just hesitant to make a move. Economic uncertainty. Between inflation, news headlines, and concerns over affordability, some buyers are sitting on the sidelines. Inventory isn't keeping up. Even though new listings have increased since January, we're still not seeing the flood of new homes needed to meet demand, especially not in the price ranges, areas, or in the condition today's buyers want. So yes, sales volume is down, but that's only half the story. Now here's the part that surprises a lot of people. Even with fewer sales, prices are still on the rise. Our second chart shows that by June 2025, the average sales price in our market was about $423,000 and the median was about $364,000. That's an upward trend and it's holding steady. Why? A few reasons. Limited move-in ready supply. True housing inventory in the greater Chattanooga, Tennessee area has been rising, but that inventory may need updates or repairs. That means competition for move-in ready homes, which pushes prices up. Strong demand from relocators. People are still moving here from places like California, New York, Texas, and Florida because Chattanooga offers more space, more value, and a lower cost of living. Price per square foot is holding steady. We're averaging around $201 per square foot, which tells me buyers are willing to pay a premium for quality, especially in desirable areas like North Shore, Ooltewah, or even new construction in Harrison, Birchwood, and Appleton. This is where it gets interesting. When you see fewer homes being sold, you'd usually expect prices to drop. But in our case, demand remains strong, just more concentrated. Fewer buyers are active, but those who are tend to be more serious and more often financially capable. We're also seeing tighter move-in ready inventory. There simply aren't enough move-in ready homes in key areas. Existing homes coming on the market today simply may not be attractive to buyers, given that they may need remodeling or even just aesthetic updates like interior paint and new carpeting. More affluent buyers. Out-of-state relocators and investors are driving competition to the mid to high-end markets. In this category, I'd also put retirees who may be cashing out on their large home equity positions and buying less expensive properties, often with cash. Seller holdouts. Many would-be sellers are still sitting tight thanks to low interest rates they locked in years ago. That limits turnover, especially in established neighborhoods. So even with fewer sales, the homes that do go under contract are often commanding top dollar. Now let's talk about the third chart, which tracks new listings, pending sales, and closed sales from January 2023 through June 2025. As a reminder, this chart is for the greater Chattanooga area, all listings including single-family, condos, and apartments for the entire local MLS. This is not the more limited Chattanooga MSA Plus set of data. This chart shows something pretty telling. The spread between new listings and closed sales is getting wider. In 2023, that gap, meaning the number of newly listed homes versus the number of homes actually sold, was relatively narrow between 200 to 300 homes. But by mid-2024, that spread jumped to around 500 homes, and in 2025 it's still sitting around 450 to 500 units. In fact, the spread for June 2024 was 418, while for June 2025 it was 474 units. Here's what that means. More homes are coming to the market, but a growing number of those homes aren't selling quickly or at all. That shift tells us that the market is moving away from the frenzied seller's market we saw during during the pandemic years and heading toward a more balanced or even buyer-leaning market. And this gap by no means is limited to the greater Chattanooga, Tennessee area. In fact, in May of this year, Redfin reported that nationally there are nearly 500,000 more sellers than buyers. Writes Redfin, at no other point in records dating back to 2013 have sellers outnumbered buyers this much. In other words, it's a buyer's market. Let's break it down year by year to give you a clearer picture. In 2023, new listings climbed steadily through spring and summer, peaking to just over 1,400 units in July. Pendings and closed sales followed that trend, although a little bit lower. The market was relatively balanced, not too much inventory, not too little. In 2024, new listings peaked to just over 1,500 in August, but closings did not keep up. The gap widened. Pendings were strong, but didn't always translate into closed sales, which could be due to financing issues, inspection concerns, or just buyer hesitation. So far in 2025, we're seeing the same new listing volume, just over 1,400 homes per month from March through June, but closed sales are down to 958 units by the same month. That means that a lot of sellers are still trying to time the market, but not everyone's finding the buyer they hope for. And with that, we're starting to see longer days on the market, 50 days to be exact, meaning that it's taking nearly 2 months for the average home to go under contract. And we're seeing more price reductions, especially for homes that are overpriced, needing repairs, or in less desirable locations. Now let's take a closer look at what's really fueling the shifts in our local market and what might happen next. This one's a biggie. According to Mortgage News Daily, mortgage rates in 2025 have hovered between 6.6 and 7.25%, which is a significant jump from the ultra-low rates we saw in 2020 and 2021. When rates go up, borrowing becomes more expensive, and that affects affordability for nearly everyone. Here's how it plays out. Monthly mortgage payments are hundreds of dollars higher for the same home price. Some buyers lower their budget, delay their purchase, or leave the market entirely. Homes sit longer and the listing-to-sale ratio gets stretched. But there's light at the end of the tunnel. Rates are forecasted to ease slightly later in 2025 and into 2026. For example, Fannie Mae is predicting that we'll be at 6.5% by the end of the year and 6.1% by the end of 2026. The more conservative Mortgage Bankers Association predicts 6.7% by year's end. As interest rates fall to 6%, we may see demand pick back up, especially from first-time buyers who've been priced out. But rate drops are going to take a long while. For now though, higher rates are a drag on volume even as prices stay firm. Let's talk inventory. In Chattanooga, we've seen a noticeable increase in the number of homes for sale, up to 3,305 for the greater Chattanooga area MLS and 2,327 for the Chattanooga MSA market as of July 18. This tells us that sellers are feeling more confident about listing. Maybe they're trying to capitalize on higher prices, or they're experiencing life changes like relocation, upsizing, or downsizing. But here's the catch. More listings don't mean more sales if buyers can't afford the homes. The widening spread between new listings and closings suggests that not everything is selling. And that's often a sign of mismatched pricing or oversupply in certain segments. So while more inventory is good for buyers, offering more choices and negotiating power, sellers need to be realistic. Overpricing will get you passed over, and if your home hasn't received an offer in 1, 2, or 3 months or longer, your home is priced too high. The key now is positioning your home properly and having an expert help you interpret the local comps, condition, and buyer behavior. We also have to look at this from a macro lens. We've entered into a more normal, balanced market. And as I predicted in last month's video, we could easily be in a seller's market by mid-2026. Think about it. The post-COVID surge was unprecedented. Record low rates, tight supply, and massive demand made for a frenzied market. Homes flew off the shelves. Bidding wars were everywhere. But now, homes are staying on the market longer, 50 days as of June 2025 for the greater Chattanooga area. Buyers are getting inspections again, negotiating repairs, and taking their time. Price growth is slowing down, and some homes are even seeing price drops. That's not a crash, that's the market finding its rhythm again. And for savvy buyers and sellers, it's actually a good thing. More transparency, more strategy, less chaos. Let's break it down into real takeaways, whether you're buying, selling, or just watching the market. If you're a buyer, now's the time to get strategic. You've got more options, inventory is up, and sellers may be more flexible than they've been in years. Negotiating power is back. You may be able to negotiate repairs, closing costs, or even a price reduction, especially if a home has been sitting for a while. But here's the catch, the best homes still sell quickly, especially in desirable neighborhoods. So work with an agent who knows how to spot value and help you move confidently when the right one comes along. If you're a seller, it's not 2021 anymore, and that's okay. Homes are still selling, especially if they're priced right, well prepared, and marketed professionally. Presentation matters. Buyers are being pickier, so staging, repairs, and curb appeal are more important than ever. Overpricing will hurt you. Today's buyers are educated. If your home is priced too high, they'll pass you by, even in a hot zip code. But if you follow expert guidance and lean into smart marketing, you can still get top dollar, especially with demand from out-of-state buyers who value Chattanooga's lifestyle. If you're an investor, opportunities are opening up. More inventory means more properties to choose from, including some that have sat on the market too long. Rents remain strong, especially near UTC, downtown, and in areas like Red Bank and East Ridge. Long-term growth looks solid given our economic base, population projections, and livability. Look for value-add properties where you can increase rent or resale potential and be ready to act when the right opportunity pops up. So where does all this leave us? Here's the big picture. Sales volume is down, but prices are up, driven by limited inventory and high-quality buyer demand. Listings are increasing, creating a wider gap between homes listed and homes sold. The market is shifting, not crashing, and we're moving toward a more normal, stable environment with better opportunities for thoughtful buyers and sellers. Chattanooga remains one of the best places to live, invest, and grow. And understanding these trends help you make smart moves, whether you're upsizing, downsizing, or just starting your home ownership journey. If you're thinking about making a move, buying, selling, or investing, let's connect. I'll help you understand where you stand in today's market and how to get the results you want. Just call or text me at 423-820-3663 or head on over to movetochattanooga.com to start your journey. And if you found this breakdown helpful, make sure to hit that like button, subscribe to the channel, and share this video with someone who needs to hear this. Wondering how to buy a home in today's real estate market? Watch this video next.